What stock are we looking at? Let's walk through this slowly. What stock are we looking at? Apple. Apple. Good job. First thing. Then if we're buying a call or a put, if you notice underneath my chin, what does it say down there? Does it say call or does it say put? Right underneath my chin, underneath where it says spread. If I'm buying a call, what direction am I betting the market going? Am I betting on the market going up? Am I betting on Apple's price going up? Or am I betting on Apple's price going down? We're betting on Apple price going up. Great. Now, for you guys, for you options traders that's been trading forever, here's something that you guys probably haven't seen. Look underneath my chin. You're going to see something that says volume. When I start showing the Millionaire Challenge trade of the day, a lot of people were like, Joel, I don't know what we're looking at. Why are you telling everybody to write down the biggest number that you see? What is the biggest number that you guys see on the volume? What is the largest number? And that's my bad. Let me pull this up so you can see it. What is the largest number that you guys see? 20,000. Correct. That means 20,000 contracts are being bought at that strike. If you multiply that times 100, that tells you how much money was spent just on that strike. Just add 3 zeros, 2 zeros, or is it 3? 2 zeros. That's a lot of contracts. $2 million worth of contracts are being bought. 20,000 contracts, but 20,000 contracts is 100 shares, guys. Remember, each contract is 100 shares. That's 20,000 contracts. That's 2 million shares. But then you got to multiply the 2 million shares times 307. That's how much money is spent just on that strike. One strike, not the other strikes, just that one. All right. I will not buy an option unless I see at least 1,000. 20,000 is more than enough. More than enough. The purple area is going to be called your in the money strikes. Let's switch it on over here. Looking down this way, your premium. The purple is going to be in the money, which is less than. Let's look at the price of Apple. What price do you guys see right here? What price is Apple today? What price is Apple today? $307. Exactly. So Apple is 307. That means in the money is going to give me strike prices that are 30, probably 8 or less. That means 307, 306, 305, 304, 303, 302. Anything less than 307 is going to be in the money. And if you notice the strikes right here, you're going to see the numbers start going down. You see where it says at the money and it says 305. In the money is going to be 302. In the money is going to be 302, 300, 297, 295, all the way to 290. Anything lower than 307 Anything higher than 307 is going to be what we call out of the money. Okay. In the money is the purple. The numbers are smaller. Higher than 307. Because Apple is at 307, that's gonna be the at the money strike. This is the at the money strike, the price that Apple is at right now. Yes, Mika, you are correct. The only reason why you guys got confused with purple and black just now is because now if I was to go to the other side of the world, and I don't see where it says it. I think I covered it up. I think I did by accident. Okay. You can see it. What does it say under premium? Are these calls or puts? Underneath premium, you can barely see it. And that's my bad. These are puts. And this is Thinkorswim Platinum Plus. Thank you for asking. You're going to have in the money, at the money, and out of the money on most platforms. Most of the time, they're going to have them separated in color, but different platforms do different things. So just be careful. And look at the volume over here. Here's what's interesting, guys. Is there a number on the volume side that is higher than 20,000? Is there any number that's higher than 20,000 on the volume right here? What's the largest number you see? What's the largest number that you see? What's the largest number that you see? 15,000? Now we call this your call to put ratio. I want you guys to think about this. Why does Joel always talk about volume? He always talking about volume, not open interest. He's always talking about volume. Because if the call side is heavily weighted with people buying 25,000 here, 15,000 here, 18,000 there, 10,000 there. The ratio of call buying to put buying is higher. It's like 2 to 1. More than likely, the market's probably going to go up. So anytime I'm thinking about buying for a certain amount of time for what's going on right this second, I'm going to always go with the side that has the most contracts being bought. If I see a whole bunch of puts being bought, I won't buy that company to the upside. I'll wait, or I'll bet on it going down. You're going to hear people on TV talk about a call to put ratio. That's what they're talking about. The ratio of call buying to put buying is, whatever number. Now, does it work 100% of the time? No. But it does help. It really does help. And if you see everybody buying at a certain strike, you remember how I showed you guys that 20,000 that strike that had now at the time, the at the money strike usually does have the most contracts being bought at that time. But if I see a strike that's out of the money, which is higher than the price that we are right now, and I see an unusual number like 100,000 contracts, let's say Apple's sitting at 307 and everybody is betting on a strike that's at 400 and there's like 1 million contracts being bought, I'm going to say somebody knows something. Somebody got some type of insider trading going on. That's just my opinion. Doesn't mean it is happening. So you're allowed to go buy that strike also, because we are allowed to look at the volume, even though somebody else might have insider information. And I've used this over the years where we would see, man, I tell this story all the time. I was doing a consultation with a buddy, and he was looking at Ford at the time. I've hated Ford since I started trading because the stock has been going down since 2002. Like, the stock has been going down for 26 years, and y'all keep buying the stock. Anyway, it's been going down for 20 something years. I know you talk about unusual options activity. I want to show you something. I'm like, all right, we looked at some December options contracts. It was a year later. Well, I wouldn't say a year. I think it was during that year. I think it was about 8 months or 9 months. Maybe it was like maybe February or March. I was doing the consult. We were looking at December options, and there was like 1.5 million options contracts being bought at a strike that was Ford would have had to double or triple in price. I think at the time Ford was at $7. We saw 1.5 million contracts being bought at the 20 strike. Y'all heard what I just said? Ford at the time was $7 a share. And somebody was betting on Ford going to 20 by December. 1.5 million contracts. And my eyes was like this. What the heck? I was like, what the, to this day, I have never seen anything like that. So when I see something like this, listen up, guys. When you see something like that, it's important that you check the put side too, because it might be they might just be trying to cover certain areas. So sometimes there might be a 25,000, there might be 25,000. They might be buying a collar, or they might be trying to buy an area. Yeah, a strangle. So be careful. If I see 25,000 on the call side and then I see a lower price that's 25,000 on the put side, it might be a strangle or a straddle. But it was 1.5 million and it was nothing else around. Nothing. Clear space. So of course we bought Ford. And we made a killing. But we found out later that the F-150 electric vehicle was going to be revealed at that time. And we saw somebody who had that news 8 months prior had bought 1.5 million options, probably for a penny each. And that bad boy hit. We rode Ford from $7 to $24 to that strike, and then we sold. One of the best trades I've ever had off of unusual options activity. So if you guys see something like that and you don't come in here and tell us about it, you're gonna have bad karma. You better share that news with us, unless you on the inside and you can't give out insider information. All right. But yeah, when y'all see unusual options activity, y'all better come in here and let us know. If you see something, you better say something. They can't take us all to jail. Actually, they can. But nah, we have the right. If we see contracts being bought, we legally can see the volume, and we can place those trades as well. Just make sure you document it when you do it. Say, look, I took a snapshot. This is why I bought it. I don't know what was going on. I bought it because it was unusual. I learned it in this dude named Joel Harrison's live. But yeah, no gatekeeping. No gatekeeping. All right. So we see unusual options activity all the time. All right, we see unusual options activity all the time. What's crazy is that we see unusual options activity daily. Like it doesn't have to be 9 or 10 months out. Sometimes we could just be trading intraday, and then all of a sudden you'll see an options contract that's ridiculous that just pops up out of nowhere. And the stock prices start going towards that unusual options activity. I actually learned this strategy from the Nigerian brothers. The Nigerian brothers, who used to be on CNBC, they have a book that's out called Unusual. I think it's called Unusual Options Activity, to be honest. And I think they offer it for free. But they used to be personalities on CNBC on this show called Fast Money that I watch. And I guess they did so well that they left the show. And that's all they do. They teach unusual options activity and options with their particular company. So y'all can go look them up, study what they're doing, grab the book. I don't know, but this is a little bit of what we do. All right. All right, guys. So we're going to keep it simple. We're going to keep it there. For the next 30 minutes, though, what I'm going to do is I'm going to look at your stocks. All right. I'm going to look at your stock. So what I want you guys to do in the comment section, and we're going to look at the options also. I'm going to show you guys how to look at that stock, and then we're going to look at options 3 or 6 months out, see if we see unusual options activity, or if you guys see unusual options activity, ask us if this is it. So we can all capitalize also. All right. So I'm going to pull up my charts. The only thing, guys, is you got to make sure that that stock that you guys are showing me is $1 billion in market cap or larger. It has to be $1 billion in market cap or larger. All right. Don't show me any penny stocks. You guys are going to make me curse. I know y'all love it, but you can't show me no penny stocks. All right, let me grab my charts. Why is it not popping up? While I get my charts together. Maybe I got a thing on it. What is going on? Hold on. Sorry, guys. My window capture is not there. All right, let's see if we can do it this time. There we go. Woo! Boy, I be scaring myself sometimes. All right. We have charts. See, I don't be sweating when I be panicking. I be having technical difficulties all the time. I've learned how to stay cool. All right, let's look at some of you guys' stocks. So I think we pinned one earlier and I missed it. If I did, I'm sorry. I see Google. Let's look at Google. All right. Oops. Sorry, moderator. Which one did you pin? PP something? Pin it again. PPTA from Sue. There we go. PPTA. I've never heard of that stock. PPTA, which is Perpetua. You got me on that one. Guys, this is a very bullish company. All right. So I'm using the Thinkorswim platform. I don't want any of you guys to get confused. Stocks are very easy to understand. All you need to know is that if you wanted to buy this stock, the highs were around $35. All right. If you have $35, you can buy this company. It's dropped all the way down to 30 today. So let's just do the math. If you bought something for $35 and today is $30, you lost $5. It's down $5. Okay. All right. What I like about this company, though, what I like about it is, first, it's trending to the upside. You got a 200-day moving average that's angled up, which increases your luck. It's staying within this channel right here. And anytime it breaks above that channel for you traders, it comes back down to the trend line. All right. I mean, this is very clean. And guys, I'm looking at what we call a week chart. Okay. A week chart. That means every candle that you're looking at represents 7 days. Now, there's nothing to understand. This basically means if you wanted to buy this, it's 35 bucks. You put it in your portfolio and you hold it as an investor, especially if you're new. If you want to know the history of that company, the history of this stock, you can go back and see what it did, a year ago. A year ago, January of 2025, this stock was $11 in price. You could have bought this stock for 11 bucks 1 year ago. 11 bucks. It's now, sorry about the comma, it's now $35 1 year later. I think that was a year ago. I got to check. I might be wrong. Yep. That means, using my special tool here, you could have bought this. You could have put $11 in your account. And 1 year later, that stock is up about 248%. That is a real nice move to the upside. Now, that is as an investor. As an investor, guys, this stock looks like it fluctuates 5 bucks. So every time it drops $5, buy it. $5, buy it. $5, buy it. Do not buy it at the highs. Buy it every time it touches this trend line. Very, very easy to understand. How do I know if it's on sale or not? You got to learn how to draw these trend lines. When you learn how to draw these trend lines, you see how every time it touched this bottom line here, you would have known to buy some. Oh, you see this? Every time it touches this line, you buy. If you haven't, or if you're trading this, you could trade it this particular way. Okay. As a swing trade, this is as an investor that wants to hold this for a long time. But let's say you wanted to buy this as an option. Well, for one, guys, you could buy it down here and you can buy it at the money. So right now, this company is sitting at $29 a share. The high is 35. I don't know why it keeps doing a comma. Sorry about that. I'm not used to this platform. I mean, this computer. Where is the dot? That's really bothering me. Hold on. Got to change that. Can't have no comma right there. Oh, God. That's not even a dot. I don't know where the dot is. Where's the period? Oh, there we are. I think that's it. No, that's not even the period. Jeez Louise, Joel. We just gonna do 29. Keep it simple. All right, 29. All right. So let's say you wanted to do an at the money strike. Yeah, right. So let's say it's at 29 right now. If it's at 29 right now, that means the at the money strike is going to be 29. Anything higher than 29 is going to be out of the money. Anything less than 29 is going to be in the money. So let's just say I want to keep it simple. Joel, I just want to buy an option 12 months from now at the money. Well, great. We're going to go here. We're going to pull up all products. We're going to see if it offers options. And it does offer options out to February 2026. I'm going to take a picture of it, okay? And you guys are going to tell me how much this option is going to cost at the money, okay? At the money, you guys are going to tell me, A, how much volume is at that strike and how much you're going to pay. So when I pull up that option, I'm taking a picture, guys, so give me a second. If I wanted to buy that option on Thinkorswim, give me a sec. All right, here we go. If I wanted to buy that option on Thinkorswim, this is how it's going to look, okay? I want to buy a February 2026 option. Y'all see that? We're going to go out 1 year till February 20th, 2026, which is probably going to be a Friday. We know that the what price was it? I forgot that fast. We were at what, 27? We know we were somewhere around $27, so we know that the at the money strike is going to be somewhere where the purple and the black meet. You see how 25 and 30 is right there, and we're sitting at 27 right now. So the at the money strike is going to either be in between there, or I can pick the 25 or the 30. To figure out how much it's going to cost, someone tell me how much either of those at the money strikes is going to cost. I see one answer. Oh, it's already 2000. Oh, it's already 2026. You're right, guys. I didn't go out a year, but whatever. Let's just assume I'm messed up, but y'all understand what I'm doing. I'm glad you caught that. We'll look at 2027 too. For now, we'll just do this one. We'll do next month. So next month, you can either buy it for $520, or you can buy an at the money strike that's $200. We're gonna talk about tomorrow the benefits of buying the one that's $200 versus $520, because a lot of you guys are like, I'm just gonna buy the one that's $200, Joel. Like, why would I buy $520 when I can buy the one that's $200? But you guys are right. Let's see how much it would cost if we were to go a full year out. All right, that's my bad. I'm glad you guys caught that. Instead of cursing me out or calling me a dumbass in the comment section. That's what I'm used to. Man, I'm getting out of here. This dude can't even find the right year. How can you trust him? All right, the earliest date I can get, guys, is January. Oh, no. I can do January 2027. So let's do that. All right, I'm going to take a picture again. I'm out of here. Cat can't even get the year right. You think I'm going to learn options from him? Hold up. Let me close this. Here we go. All right, I'm trying to make it as clean as possible. All right, here we go. Let me take this picture. All right, this is better. 2027. Here we go. This dude got the nerve to sell an options class for $700 and he can't even get the strike right. That's how y'all be talking in the comment section. He got on shades. I don't even know how he see. All right, hold up. All right, I got it. Oh, I think I got it. Yep. All right, here we go. 2020 Shem. All right. Let's do this again. Here's the strike. All right, so here's my chin. We're going to go down the strike. Y'all see, those are the dates. You can go the 15th. 2027. You can control 100 shares for over a year. And you're going to see the 27. Well, we know that the stock right now is sitting at around 27. So you know that black and purple where it meets. How much is it going to cost me? There's the ask. So this is the ask. How much is it going to cost me to hold this for a year? Wait, hold up. Not the left column. Oh, yeah. You guys are looking at the right column. Yep. Either $900, you got it all the way up. It's going to cost you guys, because remember, you're controlling 100 shares for a whole year. So for $900 or $1,150, you are going to control $2,700, because it is for a year, guys. So I see why, it's not quite $2,700, but for $900, you can control 4 times that amount, because the stock is sitting at $27. You're going to be able to control $2,700 worth of this stock for a whole year. And yes, you can lose all of that. Now, there's absolutely no volume. You might not even be able to buy that option from anybody. Y'all see that? There's like no volume. You see underneath my volume, underneath my chin, it says volume. People say, well, why isn't there any volume, Joel? Because there isn't anyone that's willing to rent these shares for a full year. They're not willing. There's no one out there that's willing to take this or rent this. Okay. I like to see 1,000 or more. 1,000 contracts or more. Now, that doesn't necessarily mean that you can't do it. You can put in an order. You see, one says 22. So you might be able to grab some, but if the stock just goes stupid in the next 3 or 4 days, you might not be able to get out. You might have a profit. I've seen people, I've had profit before and couldn't get out the option because it was an option that was so far out, nobody was willing to buy that option from me 1 year later. So the shorter the time frame, like if it's next week or 2 weeks or 2 months or 3 months with a bunch of volume, I can probably get out of that option because someone has to buy this from me in order for me to make my profit. Right. Once you get closer to the time, Platinum said it correctly. When you get closer to the expiration date, when you get closer, and we call that theta. Well, we don't. We'll get into that. I'm not the best when it comes to explaining Greeks. I can explain the hell out of delta, though. I'm just being honest with you guys. But as you get closer to the date, you're going to see more volume. When you get closer to the strike price, you're going to get, well, we're at the strike price, but as you get closer to the date, you're going to see more volume. It's further out. It's just like if you wanted to rent a house. Right now, it's probably harder to find a house to rent for the Olympics, for the Summer Olympics. The Summer Olympics is 2 years from now. You can try to book your LA resident Airbnb right now. But the odds of you finding a house where you want it might be low, but it might be cheaper. So if you're thinking about going to the Summer Olympics, you might want to book your Airbnb 2 years in advance. It's the same way in this options world. All right. You can book it if there's somebody out there that can do it. And as we get closer to the Olympics, you're going to see more and more homes pop up. The volume of Airbnbs that are available to rent out are going to go up. But for now, 2 years later, there's only will rent 2 years in advance. I've tried that many a times where we tried to I would try to rent something months in advance. Like when back in 2020, the 2020, I tried to book I booked an Airbnb condo on the beach for the Miami Super Bowl. I booked it probably 8 months in advance. 1 week before the Super Bowl, they canceled my Airbnb and was like, we're sorry. Which I don't know if I could have sued or whatever, but they was like, we can get way more money now. So sorry, bud. But you don't have. So I was out of a place. I had to go stay with my friend, and I had a condo on the beach that I had booked like 8 or 9 months in advance for like $1,500 or something. They was like, whatever, bud. You're not getting that Airbnb. Anyway, so yeah, the closer you get to it, the better. All right, time decay. There you go, Ann Barrera. That's the correct terminology. All right, next stock. We got a little bit of time. It's 7:52. What other stock? At least you guys see the process. Okay, AVGO. All right, so we're gonna look at Broadcom. I love Broadcom. Shoot, in fact, let's see how much. Now, also, guys, the larger a stock, remember those are real dollar amounts. So when you're controlling 100 shares, the bigger the stock price, the more money that you're controlling. So the larger the stock price, guys, the higher those options price premiums are going to be. So a lot of people love to stick to companies that's got like a $50 or less stock price so that they can go out 12 months. All right. So AVGO is an expensive stock. So I can already tell you going 12 months out on Broadcom, that's going to be a pricey option because you're controlling $32,000 for 12 months. So if we were looking at AVGO, which is Broadcom, I love this stock. If you don't know, they had a relationship with Apple for a very long time where they were at one point, they were the only chip company that was providing chips for Apple. Recently, Apple is now playing around with several different companies, but AVGO at one point was the primary chip for Apple phones and computer. Well, I don't know if computers, but I know for their phones. So Broadcom, if you notice, the highs were $414. All you need to know is if you wanted to buy this stock right now, and you wanted a full share, it was going to cost you $414. It's going to cost you $414. Broadcom right now is sitting at $329. It's on sale, people. Now, how much on sale is it, and is it realistic? Broadcom is now at $320. Broadcom is sitting at $320. That means it dropped from $414 a share to $320 a share. It's down 20%. Now, if you're new to this game, if you're new to the stock game, 20% should be the basic on sale value that you use. Now, where did I get 20% from? That's the number that we use in the real estate market. Anytime real estate is down 20%, we're like, ooh, it's got enough equity in it for me to play around in it. I can do some renovations, maybe sell it and still make a little bit of money. Or I don't have to pay mortgage insurance premium because I got 20% equity in my real estate. In the stock world, I've adopted that strategy. So most stocks, and I say most, the 20% range is where we start to buy. Now, depending on the beta of a company, and we learned about beta earlier, the higher the beta, the guys, cryptocurrency, MicroStrategy, your Bitcoins, your Palantirs, your high flyers, guys, those stocks are going to drop 30 to 50% within the next year, almost like clockwork. The higher the beta, the more it's going to drop. But it also helps you when it goes to the upside. So when a company like Broadcom drops 20%, you're going to start seeing people start to buy a little bit of it. But because Broadcom has a high beta, it still might come down 30 to 40%. My super sweet spot is going to be to catch this cut in half. That means if I can catch Broadcom for $207, I almost can buy it sight unseen. If you notice, I got alerts already set up. These little yellow dots, you guys can't see it on my screen, but I got a yellow dot at 272 and I got another yellow arrow at 207 to tell me when it's on super sale. What's giving me the confidence of buying it? The 200-week moving average is angled up. And not only is this yellow line angled up, it's been angled up, guys, since, good Lord. Broadcom's yellow line's been angled up, guys, since, look, since, I don't think, when has the week moving average ever been down? Guys, the 200-week moving average has never gone down on Broadcom. That means it's been bullish pretty much the whole time it's been available for you to buy. And I just went all the way back to 2013. This company has been bullish for 13 years. So it's one of those companies that if I can buy it 50% off, or if the volatility index can somehow jump above 30 or 40 or 50, there's several ways you can buy this. You can buy this when it's 30 to 40% off. You can buy it when the volatility index jumps above 30 or 40. You can buy it when it gets down to this yellow line. There's so many different ways you can buy this. You can buy it. You could possibly buy it here. I would need it to come in just a little bit more because it's a high flyer. 18% is not going to cut it for me. Not for this stock. I need it to be down 30 to 40%. If I can get it down 30 to 40%, which is going to take you to, at 414, 30% is going to put you at 30% is going to put you at 287. 40% is going to put you right around 250. 250 is what I'm thinking of. I'm thinking about 250. That's why I have an alert here at 270, so I won't miss it when it hits 250. I've already done my calculations. If it gets down to that level, you could use the what would Joel do method and wait a second. It depends on what the VIX is at that time. I teach you guys to do this. This is what I teach. I teach you guys to make sure that it goes down like this, where it's red, And then as soon as you get 2 green candles, then you buy your option 1 year out. You see this? That's when you do it. Now, will I do it before then? Yes. If the volatility index is above 50 or if I can get this bad boy cut in half. Now, how much are those options going to be 1 year from now? Well, if we're at 320 now, that's going to be the at the money strike. So I'm going to run to the options market. I'm going to go 1 year out. This time we're going to go to 2027. I'm not going to make that mistake this time. We're going to go to January 2027. Now they're going to be expensive. So up thinking it's going to be cheap. Because you're controlling 32, well, you're going to be controlling about $25,000 for a whole year. So don't get your hopes up. But when you pull those options up, you guys are going to tell me what to buy and if there's enough volume for Joel to get in. Remember, you're controlling 100 shares. Right now, it's sitting at 320. That means you're going to be controlling $32,000 worth of Broadcom. How much is it going to cost you to control $32,000 worth of Broadcom? How much is it going to cost you guys? Remember, you want to look at the ask. So the ask is going to be underneath my chin. Right where the purple and yellow meet, there's going to be 2 different prices for at the money. In the comment section, how much is it going to cost me? I need the dollar amount. $7,100. Yes, that is expensive. But it's still not $32,000. The other price was $66.35. You can control Broadcom for a whole year. Now, why would I want to do this? Think about it, guys. Watch what happens. Watch this. Why would I spend $7,000? Watch why I would do it. I'm going to spend $7,000 because if I was to go 1 year ago, guys, January 2025, when we hit that low in April, do y'all know that low in April was 135? Y'all heard what I just said? The low in April, guys, was 135. We're sitting at 320 right now. Do you know how much money you would have made in theory? If I was to make $100 per dollar move, in theory, what is 320 minus 135 times 100? What's 320 minus 135? Somebody said bunches. 320 minus 135 times 100. That's how much you could have profited. In theory. In theory, we always got to say in theory. Uh-oh. Wait, why is it not showing? Hold up. Did I just blank out? Oh, hold on. Why don't y'all can't see it? Hold on. Hold on. I'll fix it. I don't know what just happened. All right, hold up. I'll fix it. I don't know what just happened. All right, now can you see it? That's my bad. Going back and forth on the platform. I'll make that bigger. You know, being a live host, boy, y'all don't know what we got to go through. All right. So 135 to 320. There you go. You see how, yeah, 135. And when it went to 414, that was crazy. You're talking about a $300 move times 100. Hold up. I think y'all did the math wrong. 320. Let me make sure I do this right with you. 320 minus 135, 100. There you go. $18,000. Now, would you take $18,000 with a $4,000 investment? I sure would. All right. And at one point, it was even higher than that. So that's why we say in theory, guys, because we don't know. It depends on volatility and theta and all of that crap, right? But in theory, if you're able to wait, if expiration was like this Friday, you can capitalize on every dollar move. All right. You said you're a CPA? All right, Sue. I will never question you again. That's what I'm talking about. So you see why people do the options. Now, I will teach you guys probably on Thursday or Friday how to cut this cost down. You're not going to quite make that much, but you can cut the cost down with debit spreads. If that type of amount is just too much for you to handle, I can get that cost down to like $300. All right, you're not going to make 18,000, but you're able to hold that trade for a whole year, and you don't have to have thousands of dollars to enter that trade to hold it for a year. But that's why we're going to do this. You know, that's why we're going to take this slow each day until we get it. All right, let me get out of here, guys. I'm 8 minutes over. You guys did well tonight. I didn't know how quickly you guys were going to be able to pick up on options, but you guys are doing very well for the last 2 days. I will see you guys tomorrow. What is going on here? I will see you guys tomorrow. We're going to keep the same theme with Justin Biebs. Now, if you guys saw the Grammys, I know a lot